Welcome to the deep dive.
Great to be here.
Today, we're really zeroing in on Las Vegas real estate, specifically what things looked like in April 2025.
Yeah, we've gathered quite a bit of info, some recent articles, key market reports.
Right, and the aim is pretty simple. Pull out the key insights for you. Things like price moves, inventory levels, sales trends.
Cut through the noise, basically.
Gosh.
We've got stuff from the Review Journal, Nevada Business Magazine, some real estate sites like NorthLas Vegas.What.
The luxury playbook, fortune for some broader context.
Exactly. But really, the core data, the hard numbers, come from the Las Vegas Realtors April 2025 update. That's our anchor.
Okay, so let's dive in. First thing that jumped out, at least to me, were some headlines that felt, well, a bit contradictory.
Yes, you saw that too.
Yeah, the Review Journal said prices dropped from a record high in April, but then Nevada Business Magazine suggested they were, quote, hovering around record highs. How does that work?
It's a really good point, and it shows why you got to look a bit deeper. Both can actually be true, depending on your comparison point.
Okay.
So let's look at the LVR data for single-family homes. The median price in April 2025, $480,000.
480K.
Got it. Now, compared to March 2025, that is down just slightly, about 1.0%.
Okay, so there's the drop from a record high, possibly. Maybe March was the peak.
Could be, but, and this is the key part, compare it to April 2024. Back then, the median was $469,000.
So year over year, it's still up.
Exactly, up 2.3%.
Yeah.
So it dropped month over month, but it's still higher than last year. Hence, hovering around record highs also makes sense in that context.
Right. Context is everything. A small step back from maybe an absolute peak, but still operating at a very high level historically.
Precisely. And we see a very similar picture for condos and townhouses.
Okay.
Median price in April was $302,700. That's down 1.2% from March, but up 4.4% compared to April 2024. So same pattern. Slight dip recently, but still elevated compared to a year ago.
Okay, that clears up the price confusion. Makes sense. Now, the other big theme seems to be inventory. The Review Journal mentioned inventory flooding the market. Is that showing up in the numbers?
Oh, absolutely. This is probably one of the biggest shifts we're seeing right now. It's quite dramatic, actually. Well, look at single-family homes again. New listings in April, 3,663. That's up 27.5% from April last year.
27% more new listings. Okay.
And the total number of homes available, actively for sale, excluding ones with offers, 6,213.
And compared to last year?
Up, wait for it, 78.7%.
Wow. Nearly 80% more homes on the market than a year ago.
80% more single-family homes. Yes, it's a huge increase.
Okay, flooding doesn't sound like an exaggeration then. What about condos and townhouses?
Similar story, though maybe not quite as extreme on the total availability. New listings were up 17.2% year over year.
Still significant.
And total availability, excluding offers, that was up 91.5%.
91%. Okay, maybe even more extreme for condos then, in terms of percentage jump in what's available.
Yeah, the percentage increase in available condos, townhouses is actually higher, you're right. Massive jumps across the board in terms of supply.
So tons more homes available,
Yeah.
but are people buying them? Did demand keep up? The Review Journal also hinted at no buyers in sight relative to the inventory.
That's the other side of the coin. And yeah, the sales numbers tell a different story than the listing numbers.
How so?
For single-family homes, 2,174 actually sold in April. Now, that was up slightly from March, about 1.5%.
Okay, a small monthly bump.
But compared to April 2024, sales were down 7.1%.
Down 7% from last year, even with all that extra inventory.
Exactly. And for condos and townhouses, the year-over-year drop in sales was even bigger, down 12.4%.
Huh. So way more listings, but fewer actual sales happening compared to this time last year.
Correct. Which supports that idea that, relative to the surge in supply, buyer activity hasn't kept pace. More choice for buyers, perhaps, but maybe less pressure.
Less urgency, maybe, which leads to the question of how quickly things are selling. What about time on market?
Yeah, that's always a key indicator.
Mm.
And it's a bit nuanced here. The LVR data shows a pretty decent chunk of homes still sell fast.
Like how fast?
For single family, 60.3% of the homes sold in April went under contract in 30 days or less.
So over half are still moving quickly.
And for condos, townhouses, it was 52.9% selling within 30 days. So yeah, a majority still find buyers relatively fast.
Is that faster or slower than before? Because with more inventory and fewer sales, you'd expect things to slow down a bit.
And you'd be right. When we look back at April 2024, 0.68.5% of single-family homes sold within 30 days. and 66.2% of condos townhouses did.
Ah, okay. So the percentage selling quickly has dropped compared to last year.
Exactly. While a lot is still moving fast, a larger proportion seem to be taking longer than 30 days compared to a year ago. It suggests the market pace is, well, cooling somewhat.
Definitely paints a picture of a market in transition. More choice, prices slightly off their absolute peak, but still high, fewer sales year over year, and things taking just a bit longer to sell on average.
That sums it up pretty well for the for sale market.
Now, you mentioned the Review Journal. They had another interesting point about the rental market. Said Vegas was bucking a trend and seeing rents rise. That seems counterintuitive if the purchase market is cooling.
It does, doesn't it? But it's a crucial piece of the puzzle. We're seeing this divergence, signs of cooling, more inventory in the for sale market.
Right.
But the rental market seems to be heating up with rising rates.
Any ideas why that might be happening? The sources didn't explicitly say.
They didn't nail down one specific cause, but we can speculate, right? If buying a home becomes tougher, maybe due to affordability, maybe interest rates.
Which we know are a factor.
Exactly. Then more people might be pushed into renting or stay renting longer. That increases demand for rentals.
And higher demand usually means higher prices.
Bingo. So affordability challenges in the purchase market could be directly fueling demand and price growth in the rental sector. The desire to own might still be strong, but the financial reality pushes people towards renting.
That makes perfect sense. A really interesting dynamic. Now, we also had that Fortune piece mentioning mortgage rates around late April. We touched on it, but how big a factor are those rates in this whole picture?
They're fundamental, really. Even if we don't focus on the exact percentage point, the level of mortgage rates heavily influences buying power.
Sure, higher rates mean higher monthly payments.
Which means fewer people can qualify or they qualify for smaller loans. That naturally puts a damper on buyer demand in the for sale market. So the rate environment is definitely a major backdrop character in this whole story, influencing affordability and demand.
Okay, so let's try and tie all these threads together. If you had to give an overall assessment of the Las Vegas market in April 2025 based on all this data, what would you say?
I'd say it's clearly a market in transition. Maybe shifting gears is a good way to put it.
Shifting gears? How?
Well, the huge surge in inventory is the most obvious shift. Buyers have significantly more options now.
Which wasn't the case not long ago.
Definitely not. And that added supply seems to be putting some, gentle downward pressure on prices month to month. But year over year, we're still up.
Right.
Then you have the sales pace, which is slower than last year. Fewer homes selling overall. And this really shows up in the months of supply or months of availability metric.
Ah, how much did that change?
For single-family homes, the effective months of availability jumped to 2.9 months.
And what was it before?
A year ago, it was much lower. This figure basically tells you how long it would take to sell everything currently listed at the current sales pace. It nearly doubled year over year for single family.
Doubled, wow.
Yeah, it went up 92.3% compared to April 2024. And for condos, townhouses, it's even higher at 4.4 months of supply, up over 118% year over year.
So moving away from that intense seller's market we saw.
Definitely feels like it. Moving towards something more balanced. Buyers potentially have a bit more breathing room, maybe more negotiating power. Sellers might need to adjust their expectations a bit, both on price and how long it might take.
Okay, so for you listening, the key takeaways from April 2025 in Vegas seem to be inventory, way up, prices, dipped a bit from March, but still higher than last year, sales, fewer than last year, time on market, stretching out a little, and rentals, surprisingly, getting more expensive.
That's a good summary. And understanding these dynamics is really important, whether you're thinking about buying, selling, investing, or just keeping tabs on the local economy.
More inventory could mean opportunity.
But the price and sales trends suggest caution is still warranted. It's a complex picture.
Which brings us to a final thought for you to chew on. We see this big inventory jump. We see sales cooling off a bit. Is this just the market catching its breath? A temporary correction after things got so hot?
Or could it be the beginning of a more significant longer-term shift for Las Vegas real estate? What other factors, maybe things we haven't touched on much, like broader economic shifts, job growth, migration patterns, investor sentiment, what role will they play going forward?
Definitely something to watch closely in the coming months. Thanks for taking this deep dive with us.